Hello and welcome to Stockwatch, presented by me, Evan Lucas, for Go Market Securities. As always, have a very good read through of the disclaimer on screen. Everything in this video is general in nature, none of it relied upon as any form of personal advice. Go Market Securities does not know your personal scenario, nor your personal financial goals, and therefore none of it is relied upon as any form of advice at all. It is just general in nature only. Right, have to really look into gold, because clearly in the markets that we currently have with high inflation, high volatility, in investing, we are always looking for ways to try and basically hedge ourselves, and gold right now is that. There is also a way though to get that slight upside, not having to necessarily hold on to the physical, but actually looking at, almost inverted commas, a derivative, and that is actually looking at companies. Because companies out there have the upside of not just offering you gold, some of them do other things like copper in terms of where they mine, and that's where I want to have a look at this. You then look at the Australian gold mining sector. It is clearly dominated by several big players. You look at Newcrest, you look at Northern Star, they're a long way ahead, and then you've got a whole heap of juniors that are in there as well. But you do need to throw in some others, things like Oz Minerals, for example. They're a little bit more on the flip side. They're a copper play that has gold inside it. And the reason you look at all these players is that at the moment, although the headline news is negative, the commodity story as a whole is actually still relatively strong. And that's where I think copper needs to play into it. News coming out of China that at the moment their drawdown on copper was negative, that's a positive thing. That means that we're in deficit in terms of those inventories that currently sit over there. You then also look at their demand for gold, and it is insatiable at the moment. And that's not surprising considering the risk that's going on in the Asian world. You can see into India as well. The demand for physical gold in India and China is going back to levels that we saw in 2020. And that explains these upticks that you're seeing in gold miners. And there's always a reason to probably make the argument that you can have a gold miner in your portfolio because it is a hedge. You know, they won't necessarily perform to the current levels they are when markets are going well, but they certainly do reasonably well when markets are going the other way. And that's why it's something to always evaluate. Gold isn't everybody's kettle of fish, I get that, but it is certainly part of the portfolio creation that you may want to think about.